the math behind Sidra's potential $2 to $5 breakout. Welcome back to the channel. This is Satoshi Guy, and today we're going deep, not into hype, not into emotion, but into the actual math behind Sidra's potential breakout to the $2 to $5 range. Numbers don't lie, and if you've been wondering how Sidra could realistically hit those price targets, this is the video you've been waiting for. So grab your calculator, because we're going to break this down step by step. Let's start with the foundation, token supply. Every crypto's price potential begins here. Sidra's total supply, like any emerging blockchain token, determines how high it can go depending on its market capitalization. If Sidra ends up with a total supply of around 1 billion tokens, a round figure used in many successful crypto launches, then every $1 increase in price represents a $1 billion market cap. So at 2, we're looking at a $2 billion market cap. At 5s, it's $5 billion. Now let's put that into perspective. A $2 to $5 billion market cap might sound huge, but in the world of crypto, that's actually mid-tier territory. Projects like Solana, Avalanche, and Chainlink have all crossed that threshold at different stages in their evolution. And Sidra's ecosystem, with its focus on long-term blockchain utility, sustainable tokenomics, and a committed community, puts it in a realistic position to target those same levels. The question isn't, can Sidra reach $2 to $5? The real question is, how quickly can it get there? Next, let's look at demand and circulation. If Sidra's circulating supply during its first listing is, say, 20 to 30% of total supply, that means only 200 to 300 million tokens will be on the market initially. This limited circulation creates scarcity, and scarcity drives price action. If the launch valuation sets Sidra around 50 cents with a small float, a sudden influx of buyers, stakers, and holders could easily push the price upward toward $2 as demand exceeds supply. Now, let's add community strength to the equation. Crypto price moves are never just numbers. They're powered by people, by conviction, excitement, and belief in the project's vision. Sidra's community has grown rapidly, with holders across multiple regions, active discussions in social groups, and continuous engagement from developers. When that level of enthusiasm meets a low supply and a strong listing event, the price action can move sharply. Think back to the early days of projects like Polygon or Arbitrum. Their early surges were not just technical, they were community-driven. Let's talk about use case and ecosystem value. The math doesn't work if Sidra doesn't have real utility. But Sidra's roadmap has hinted at integration across DeFi, staking mechanisms, and potentially cross-chain interoperability. That gives it transactional purpose. Every transaction fee, every staking lockup, every utility event reduces the available circulating tokens and increases real demand pressure. It's a classic supply-demand squeeze. And when that squeeze aligns with a limited float at launch, that's when breakouts happen. Let's say Sidra gains early listings on trusted exchanges and garners around 500,000 holders within the first few months, a very achievable figure based on current community trends. If each holder averages $200 worth of Sidra, that's $100 million in direct market participation. Add in early investors, whales, and institutional speculators, and you can easily reach $500 million in early market capitalization. That alone could push Sidra near the 1 mark quickly. Multiply that momentum by hype, partnerships, and new listings, and the $2 to $5 range becomes not only possible, but probable. Now, let's look at comparative analysis. During the early stages of Binance Coin, BNB, its market cap was below $500 million when it traded under $2. Within 12 months, BNB grew 10x. Sidra's potential path could mirror this trajectory, especially if its tokenomics include burn mechanisms or staking rewards that reduce the effective supply. If Sidra introduces a deflationary model, even a 1 to 2% annual burn, the mathematical ceiling gets higher because the circulating supply shrinks while demand continues to expand. Here's where the long-term projection gets exciting. Suppose Sidra maintains consistent growth, strong staking, and adoption in real-world utility like payment systems or decentralized apps. Reaching a $5 valuation would mean a market cap between $3 and $5 billion, roughly equivalent to the mid-2021 levels of Polygon and Chainlink. Both of those projects had smaller communities at similar stages than what Sidra has now. But remember, Every projection depends on execution. The math works only if Sidra continues building, communicating, and delivering on its roadmap. The foundation is solid, the tokenomics are favorable, and the community momentum is undeniable. What's left is patience and progress. So to wrap it up, mathematically, Sidra's $5 breakout potential isn't fantasy. With a circulating supply of under 300 million tokens, early exchange listings, active staking, and a growing community, those numbers align perfectly with achievable market caps in today's crypto landscape. It's not a moonshot, it's a formula. Strong fundamentals plus limited supplies, community momentum equals exponential growth.